Hello, everybody. I'm so happy that you are all here. First of all, I just want to acknowledge that we have people from all over the riding here today. So I want to acknowledge the over 20 Indigenous communities that this riding represents and thank them so much for allowing us to be here doing our work today. I also want to thank my team. You'll see a few people here with me today, Monique, Druin, Christy, and Lucas. They are some of the staff team that I have across the riding. And today, Monique and Druin and a special guest, Bonnie, will be giving the presentation and answering your questions. So first of all, you'll notice that we are in fact recording this. We want to make sure a lot of people could not participate. We're going to be able to share the content with them. So as we go through the process, we will do the presentation first. Questions and answers will be towards the end. So I just want to remind you that because we are recording, if you have a question that you want to discuss with us that you don't feel comfortable doing publicly, please privately message either Lucas, Christy, or Monique and let them know that you have a question. You can write the question in a private chat to them and ask them to ask it on your behalf without mentioning any names if that's more comfortable for you. You can put questions in the public chat so that we can watch them as the presentation goes on. Or of course, you can put up your hands and then at the end of the presentation, we'll be able to answer them to the best of our ability. Questions that are more personal in nature, we're going to do our best to get back to you and answer those. We don't want you to have to tell your whole life story. So hopefully this will all make sense to you and we'll get to those important questions at the end. So again, I just want to thank you all for participating. We know things have been very different over the last year, and we know that a lot of people have questions about their taxes, and that's why we did this. So I'm going to leave it to our first presenter today, who is Bonnie. Bonnie Blackwell is an amazing human being that works at Opportunities Career Services Society in Campbell River. She has been doing this work for a long time and has worked with so many people to help them prepare their taxes. Prior to the last 15 years of volunteering with Opportunities to help people with all of their tax returns, which I must say she does all through the year because she makes sure our office knows and we often send them off for people. She spent 25 years working in the banking industry. I'm just so grateful for the amazing work she does for the community and the whole region. We get people from away that ask her to help out and she always steps up to the task. Last year, I believe it was about 1,500 to 2,000 returns that she filed. So with that, I hand the spotlight over to her. Thank you so much.
Thank you very much, Rachel, for facilitating this workshop today and asking me to talk about something that just never seems to go away, taxes. Community organizations host tax preparation clinics where volunteers complete tax returns for eligible individuals. The Community Volunteer Income Tax Program, or CVITP, is a collaborative partnership between Canada Revenue Agency, or CRA, and community organizations since 1971. I am going to tell you where all the CVITP programs are operating out of in Rachel's district. And I'm just going to give you the phone numbers. I'm not going to tell you where, when the actual clinics are. So I'll go over the numbers. So in Campbell River, there's 3. There's Opportunities, and the phone number there, 250-286-3436. And the Salvation Army on Ocean Crest at 250-287-3720. And also at the Women's Center at 250-287-3044. In Powell River at 604-485-0992. In the Comox Valley at the Comox Valley Lions Club at 250-339-6232. At the Evergreen Club at Native Sons Hall at 585-9995 at Wache Friendship Center at 778-225-0308. And in the North Island, there's a drop-off at Community Futures in Port McNeill or Harvest Food Bank in Port Hardy. And the email address is christy@cfmw.ca. You can also go on to the CVITP website and look up locations. That will give you more details about the hours and types of clinics that each place has. So all our services at the CVITP are free of charge. We prepare current and prior year returns going back as far as 10 years. So are you eligible? You're eligible if you have a modest income and a simple tax situation. The suggested maximum income for a single person is $35,000, a couple $45,000, then add an extra $2,500 per child. We don't consider your situation as simple if you're self-employed with expenses, have rental income, capital gains and losses, or have filed for bankruptcy. One of the things that I can't stress enough is how important it is to file your taxes every single year. This ensures the continuity of your benefit payments. In particular, late filing can interrupt your GST, your Canada Child Benefit, and your Guaranteed Income Supplement, which is part of your OAS payment. Today, I'm going to walk you through a sample tax situation and show you how some of the tax credits work to reduce your taxes payable. Along the way, we'll address the following: tax credits, both refundable and non-refundable tax credits, and hopefully you'll understand the difference. The BC Renovation Tax Credit. This is the benefit that keeps on going. You'll see how this renovation to allow better access or easier access to a home can provide 3 different tax credits. The Disability Tax Credit, or DTC, how the tax credit works and how to apply. I'm going to take a brief digression to the Registered Disability Savings Plan, then talk about medical expenses, and then finally, I want to give a note for our newcomers. So, tax credits. Tax credits reduce the tax that you pay on your taxable income. We encounter refundable and non-refundable tax credits when preparing our tax returns. So what's the difference? Non-refundable tax credits help reduce your taxes payable to nil. So if your credits are more than your federal taxes, there's not a corresponding refund. 2 examples of these non-refundable credits would be our basic personal amount and the disability amount for self. In a moment, we're actually going to show you what it looks like in a tax return. And I want to give you a spoiler alert here. The most important thing that you need to know about non-refundable credits is that you basically take their sum total and multiply them by 15%. You get to deduct this amount directly from your income taxes payable. And I'll say this again later. Refundable tax credit. These tax credits can be paid even if you have no income tax payable. One such example is the working income tax benefit, which is now called the Canada Workers Benefit, which is for families and individuals who are working and earning a lower income. A single person can receive a credit of up to $1,300, $2,000 if they have a disability tax credit. So even if this client paid 0 in taxes, they could still receive up to $2,000 for this credit. Another refundable credit is the BC Seniors Home Renovation Tax Credit of up to $1,000. And there'll be more about this later. So summarizing the difference between non-refundable and refundable tax credits can be done as follows. Non-refundable tax credits reduce your taxes payable to zero. If the non-refundable tax benefit, for example, is $1,000 and your taxes payable are $600, the benefit will be capped at $600, bringing your taxes payable to nil. Refundable tax credits are not impacted by taxes payable. If the refundable tax benefit is $1,000 and your taxes payable are zero, the benefit will be $1,000. So now what I want to do is work these tax credits through by showing you a sample couple. I'm going to show you how a couple with a total income of $53,000 can end up with a refund of $800 more than they paid in taxes. And yes, that would be because of a refundable tax credit. So it's not possible to visit all of the tax credits that are available. We'll look at just a few with the following situation. So our client is named Fascinating and had a total income of $53,769. It consists of $7,369 in OAS, Old Age Security, $14,400, which is retirement CPP, and a $32,000 pension income from Spiffy. $5,000 was already deducted for income tax from the Spiffy pension. He's entitled to the caregiver amount, which we'll go over as time goes on here. Fascinating's partner, Bunny, had zero income and has the disability tax credit on file with CRA. In 2020, they completed a renovation to make the home more accessible and added an elevator at a cost of $10,000. So let's get started. Take a look at line 3,000, basic personal amount on this slide. It's near the bottom under federal non-refundable tax credits. It's the same for everyone whose income is under approximately $150,000. Next is the age amount for those who are 65 and older. It's $7,637. The amount is scaled back for net income between $38,500 to $89,422, after which the amount of the credit is zero. So I wanted you to notice something fishy on this slide. Take a look at the income in line 26000. You'll see that Bunny now has an income of $16,000. So that's up from zero, and Fascinating's has gone down by $16,000. This is pension splitting at its best. I just wanted to bring that out now in case you noticed, but we will be talking about pension splitting as we go through the scenario. So next is the spouse or common law partner amount in line 30300. You may generate a credit if their net income is below $13,200 or below $15,500 if you are entitled to the Canada caregiver amount. In our example, Bunny's income is $16,000, which is above the threshold. So you can see there is no refundable credit in that situation. For more information, take a look at Schedule 5. Next, the Canada caregiver amount for spouse or common law partner and or eligible dependent, age 18 or older, or line 30425. It's just under the age amount in the non-refundable tax credit section. I should have highlighted the amount rather than make you look for it. You may receive this credit of up to $7,276 if their net income is between $7,295 and $24,361. So the surefire way to be acknowledged as a caregiver for a spouse or dependent is to be identified on an approved disability tax credit application. However, in many instances, the caregiver amount can be claimed without a disability tax certificate. Canada Revenue Agency may ask for a signed statement from a medical practitioner indicating that the person is dependent on others because of impairments in physical or mental functions. The letter also needs to include the nature of the impairment, when it began, and how long it's expected to last. So now let's go to line 31285, home accessibility expenses. That's the highlighted amount in the non-refundable tax credit section. The computer program has split the non-refundable credit, giving Fascinating $7,627 and Bunny the rest, $2,373. That's for the $10,000 elevator I mentioned in the beginning. So remember this line 31285, home accessibility expenses. So home accessibility expenses reported on this line allow you to claim a non-refundable tax credit of up to $10,000. So at our 15% I discussed, that equals a $1,500 credit towards taxes payable. A qualifying individual for this type of renovation is someone who is eligible for the disability tax credit at any time during the year, or an individual who's 65 years of age or older at the end of the year. So what renovations or expenses are eligible and ineligible? So a qualifying renovation would be one that is of an enduring nature and is integral to the eligible dwelling, including the land that forms part of the eligible dwelling. The renovation must meet one of the following criteria. It allows the qualifying individual to gain access to or to be mobile or functional within the dwelling. Excuse me. And it must, or it must reduce the risk of harm to the qualifying individual within the dwelling or in gaining access. An item that you buy that is not permanent is generally not eligible. So our example of the elevator, that would be eligible. The reference notation on the slide is canada.ca/line-31285. We're going to come back to this renovation for more tax credits. It's a triple whammy, so we get to use it 3 times. Okay, so now we're going to move on to splitting your pension. I'll show you how our couple will split the $32,000 spiffy pension. You can split up to 50% of a qualifying pension. Qualifying pension is a key word for this deduction. Fascinating will get a $16,000 deduction to his net income, while Bunny will add $16,000 to her income. Also note that half of the $5,000 in taxes that I mentioned were paid on this pension will now be attributed to Bunny. Both will be entitled to claim the pension income amount, which is set at a maximum of $2,000. So now what I want to do is expand a little more on the what and why of splitting pension income. So simply, an eligible pension or superannuation or annuity payment is on line 11500, 11600, or 12900 of your return. It is not CPP and it is not OAS. So those do not qualify for splitting or the pension deduction. There's an excellent chart in the Federal Income Tax and Benefit Guide, Step 2, under Retirement Income Summary Table. This chart identifies which type of pensions qualify for splitting, the pension amount, and under what conditions it's eligible. So let's look at the box in the top left-hand corner. Our summary table indicated that the pension income reported in box 16 on the T4A has no conditions or restrictions attached to it. One such condition might be that the annuitant must be 65 years or older on December 31st, 2020. The pension is eligible for the pension amount and income splitting as well. So let's see how the SPIFFy T4A was reported on our tax return. So there's a highlight at the top, near the top, under other pensions or superannuation. It's reported on line 11500, which that was indicated in our box of our chart, which does qualify for pension splitting and the pension income amount. Up to half of the SPIFFy $32,000 pension can be split with Bunny. If you have a tax program, in most instances, it will determine the optimum percentage to split. This is reflected on Form T1032, Joint Election to Split Income. Now, take a look down to box 26000. Fascinating now has a taxable income of $37,769, which is $16,000 less than his actual total income of $53,769. Bunny now has a taxable income of $16,000 instead of $0. So why do we want to do this? It allows the higher income spouse to shift some of their income to the lower income spouse, whether they're married or common law. A significantly lower income spouse will be in a lower income tax bracket. So on to the pension income. Further down at the pension income amount on line 31400, both have a $2,000 tax credit. Our pair both have $16,000 in eligible credits for this deduction, but the maximum allowable amount is $2,000 each. So if you said to yourself, and that's a non-refundable tax credit, you're absolutely right. And if you're wondering about the $5,000 taxes withheld, you're right if you surmise the total income deducted will change to $2,500 each. Okay, so moving right along to the disability tax credit. The disability tax credit, or DTC, is a non-refundable tax credit that helps persons with disabilities or their supporting persons to reduce the amount of income tax they have to pay. The disability amount may be claimed once the person with a disability is eligible for the DTC. I'll address how you get the DTC in a moment. So the disability amount for self is on line 31600, and it's for $8,576. Claim this amount if you have a valid disability tax certificate. In our example, Bunny has a valid DTC and has claimed the amount in box 31600. Next is line 32600, which are amounts transferred from your spouse or partner. You can see that $10,178 is being transferred from Bunny to Fascinating. So let's look at the bottom part of this next slide. This is just a portion of Fascinating Schedule 2 of his tax returns that shows the amounts that were transferred from Bunny. It's her disability amount for self amount, of $8,576 and the $2,000 pension income amount that's being moved over. This amount doesn't exactly add up, but the reason is related to Bunny's adjusted taxable income, which is $398, and we're not going to cover that today. Also, we have not addressed something which is called the disability amount transferred from dependents, line 31800. It's basically the same type of credit, except it's for a dependent rather than a spouse. You would qualify for an amount if the dependent's taxable income is between $13,200 and $21,800. The disability tax credit is available to people with severe and prolonged impairment in physical or mental function. Put another way, it's for people who are profoundly impacted in their daily activities that most of us would take for granted. This means that it goes beyond being able to work. There are specific criteria that must be met. 3 examples of conditions that may qualify are bipolar disorder, dementia, or spina bifida. A qualified medical practitioner completes the form T2201, Disability Tax Credit Certificate. Having a diagnosis does not guarantee approval. Approval is more based on how the condition affects the person's daily living. Refer to canada.ca/disability-tax-credit, or there's a guide, RC 4064, disability related information. You can also see if you might qualify by filling out the self-assessment questionnaire that's in the guidebook. When approved, CRA issues something called a letter of determination, indicating the time frame of the approval. The letter may be retroactive to the date of onset provided by the practitioner. This entitles the taxpayer and the caregiver to retroactively adjust their tax returns to reflect the disability amount for self and caregiver amounts for up to 10 years. And this can be quite significant. I want to address a few things about the process that are extremely important. Firstly, before the T2201 is sent into Canada Revenue Agency, it's important that you review the form to see if you agree, first of all, with what the practitioner has written, and if you agree with the date of onset your practitioner has indicated. So many times I've seen the practitioner erroneously state the date of onset as the current year, which either leaves years of adjustments on the table or us having to go back and request a review to the decision. There's a box that you can check on the T2201 form that asks CRA to automatically go back and adjust the non-refundable tax credit, which that was a disability amount for self. Secondly, and this is really important and a pet peeve of mine. And this really is a lot of money that that's left sitting on the table as well, especially with retroactive claims. Being eligible for this credit may lead to other available credits besides the disability amount for self. That should be a positive. However, when you tick that little box on the T2201 form, usually just the disability amount for self is reassessed. There is a refundable tax credit called the Canada Workers Benefit, which helps low-income earners. The Canada Workers Benefit has 2 parts. It has a basic amount and a disability supplement. The supplement amount for 2020 is up to $700. And having the disability tax credit also lowers a threshold for the main part of the benefit as well. What we're now advising clients who are completing this form to do is to tick the box and as well write, please also reassess my electives, including the Working Income Tax Benefit, Canada Workers Benefit. I've been advised that this does not ensure that it will get done. So what that means is that it's really important to check once the adjustments have been done. How you check is by looking at your reassessed notice of assessment to ensure that the non-refundable tax credit, which is a disability amount for self, and the refundable adjustment, which is the working income tax adjustment, is done. Also, the amount for the caregiver is not automatically reassessed. The caregiver needs to submit an adjustment request, or they can send a letter to Canada Revenue Agency. Having the disability tax credit may open the door to other programs. One such benefit is the Child Disability Benefit, which is a tax-free monthly payment made to families who care for a child under age 18. And it's up to $240 a month. It's added to the Canada Child Benefit. Just one more little note before we leave this slide. If you are declined for the disability tax credit and you disagree with the decision, appeal. Okay, here's my big digression. If you have the disability tax credit and are under the age of 49, it really makes sense to open a registered disability savings plan. With up to $20,000 in federal bonds, a great matching program, and a one-time grant of $150 for BC residents, it's an excellent way to save for retirement. What happens with this plan is that at age 60, the plan owner begins to receive the funds like in like a little retirement fund. How it works is that the amount of the plan is divided by the number of years before you turn 83, or 10% of the amount in the plan each year is paid out. How the $20,000 from the government works is they will pay a bond of up to $1,000 a year, including up to $10,000 retroactively. That's why it's really important to have your medical practitioners date the onset of the disability or condition to the date of onset, because you can get up to 10 years retroactive money. The amount received is based on the client's income as well. The lifetime bond limit is $20,000. A bond can be paid into an RDSP until the year in which the beneficiary turns 49. There's also a matching program, which is dependent on family income. On the first $500 contribution, you get $3 grant for every dollar contributed, up to $1,500 a year. On the next $1,000 contribution, it's a $2 grant for every $1 contributed, up to $2,000 a year. These plans are offered at all the major banks and credit unions. Once the disability tax credit is approved, it's time to book the appointment to open the RDSP at your preferred financial institution. One thing I like about this plan is that the government and financial institution will take care of all the contributions that are coming from these programs. There's a phone number on the slide, which is 1-800-622-6232. And the website is hrsdc.gc.disability savings. Just type that into your search engine and it should take you to the right place. There's also a one-time grant called Endowment 150. This is available to BC residents under the age of 60 who have had income below $30,450 for at least 1 year after 2008. If this $150 is the first contribution of the year, it would get a federal matching of $3 per dollar, which is $450. So that turns that $150 into $600. So there is a caveat to the endowment 150. You have to apply for this proactively. I'm not aware of any bank that advises that this is available or assists with the forms. Plan Institute is a nonprofit organization that I've used on numerous occasions, and they're also an excellent source of information. Their phone number is on the slide. Okay, so back to our deductions. So remember that home accessibility expense for $10,000 we claimed on line 31285. Let's now find it in eligible medical expenses. So a permanent ramp or an elevator is considered a medical expense, and it can be claimed a second time. The thing with medical expenses is you don't claim 100% of the expenses. You have to deduct $2,397 or 3% of the net income, whichever is less. So Fascinating's income was $37,769, and 3% of that amount is $1133.07. So the non-refundable amount for the expense will be $8,866, as shown on line 33200. Now, if your medical expenses are less than the lower of 3% of your net income, or $2,397, you will not be eligible for the medical expense credit. The only way you might receive something is if you are low income. There is a refundable tax credit, medical expense tax credit for people with low income. I encourage you to reference, there's a medical booklet, RC 4065 for eligible medical expenses. There are so many expenses and there's so many things that are and are not available. One of the things that I was reading about was that vitamin supplements are not an allowable expense, but B12 is. I think a B12 shot. So you really do have to look for your medical expenses to see if they're covered. Some of the things that are covered would be your prescriptions that are not covered through a medical plan, insurance premiums for drug benefit plans. Another thing, especially for people on the North Island, if we have to see a specialist, it usually involves travel. So we can claim out-of-town travel expenses, including mileage, meals, and hotel costs. So we are now through the non-refundable tax credits. So let's take a look at how it worked. So once you've added up all the credits, line 33500, you multiply that amount by 15% to get the amount at line 35000. This is the amount you will use to deduct your taxes payable to get to zero. Take a look at the net federal tax portion section of the slide. That's Bunny in the middle. She has $2,400 in federal taxes payable and has a non-refundable tax credit of $3,926. So Bunny has zero federal taxes payable. Fascinating, on the left, owes $5,665 in taxes, but has a non-refundable tax credit of $8,522. So he has federal taxes payable of zero as well. Okay, so now I want to show you how this renovation is going to work for a third time. This is your refundable tax credit in action. There is a BC refundable tax credit that basically has the same qualifications as the federal accessibility non-refundable tax credit. So you can claim up to $10,000, and the tax credit is 10% of that for a maximum refundable tax credit of $1,000. So you record that amount on line 47900, which is the provincial or territorial credit section, and highlighted in yellow, located in the bottom half of the slide. So now for the finale, how did we do? Oops, sorry. Okay, so I know that we all know that we have to pay provincial taxes, and I didn't bring that up. But yes, our couple would have to pay provincial taxes. So take a look at line 43500. Thanks to all the tax credits, Fascinating owes $165 and Bunny owes nothing. So I think that's pretty good for an income of $53,000. But wait, there's more. So Bunny paid $2,500 in taxes and she had nothing owing. So she's going to get a refund of her $2,500 back. Fascinating owes $165.59, plus he's already paid $2,500. And he's going to get the refundable BC Renovation tax credit of $1,000. So his refund is $3,334. So Fascinating is receiving $834 more than he paid in income tax. So that's how our couple, who made $53,769, ended up with a refund of $834. So my last slide will go to our newcomers. We've seen at our office that most newcomers miss out on benefits that they may be entitled to after settling in Canada. A newcomer to Canada Revenue Agency is someone who came to Canada in 2020. So I want to pass on a note about the GST. Sorry, the Goods and Services Tax Harmonized Sales Tax Credit is a tax-free quarterly payment that helps individuals and families with low and modest income offset all or part of the GST or HST that they pay. It may also include payments from provincial and territorial programs. You're automatically considered for the GST credit when you file your taxes. So many of our newcomers don't know what the GST is, and they're totally surprised when they see a quarterly credit go into their account in July after they file their first return. But many newcomers are eligible for the GST before they file their first tax return. So you're generally eligible for the GST credit if you're considered a Canadian resident for income tax purposes the month before and at the beginning of the month in which CRA makes a payment. So that's April, July, October, and January. So you also need to meet one of the following criteria. So be at least 19 or to have had or have a spouse. So how do you apply? To apply for the Canada Child Benefit and to register your child or children for the GST, there's two forms that have to be filled out. RC 66, Canada Child Benefit application, and an RC 66 SCH. To apply for the GST credit for you or your spouse, if you don't have children, it's Form RC 151. And I would refer to Guide RC 4210, Newcomers to Canada. And that is the finish of my presentation.
Thank you very much, Bonnie. I'm sure you pointed out a few new tips and some information that some of us may have not have encountered before. So now I'm going to introduce you to Druin Young. Druin works for Rachel in her Powell River constituency office. And Druin is going to cover the guaranteed income supplement, and as it relates to your tax returns, something that Bonnie touched on. She's also going to cover some tips for you, or if you have ever dealt with CRA scammers or fraudsters in the past, or to prepare you if you you happen to get a call from one of them. So with that, Druin, I give you the screen.
Thank you. All right, so the guaranteed income supplement, it's meant to top you up for your CPP and your OAS payments up to a certain limit every month. And you have to apply for your GIS every single year. You can apply for it after you do your income tax so that you know what your income is, so that you can apply for it with the right figures. And how do you apply for it? You apply for it online. For people who haven't applied for their OAS yet, you can apply for your OAS and your GIS at the same time. Canada.ca is a wonderful website to go to if you haven't been there often enough to see how easy it is to get around. They'll answer just about every question you possibly have on income tax or the different supplements that are available. One of the things that you really need to do is get yourself a MyCRA account so that you can access your own information every month. Okay, so here we have it up on the screen here, the Guaranteed Income Supplement. You can get the GIS supplement if you're 65 or older and you live in Canada and you're collecting the OAS, which is your old age security. And there are the figures there. I hope everybody can see them, that show that if you're single, widowed, or divorced, your income has to be at that threshold, the 18,648 threshold. And then the threshold changes if you have a spouse or a common law partner. Those numbers change on a year-to-year basis. So it's really good to check into the Canada.ca website to make sure that you've got the accurate information. And there's just one little thing I'd like to point out, a problem that I see sometimes with people who come into the office and talk to me in Powell River. For example, if you're already over 65 and you're collecting your OAS, it can affect your GIS payment if you take on a volunteer job or a part-time job. Sometimes you can take on a volunteer or part-time job that pays a nominal amount of money that keeps you underneath that threshold of $18,648 or so. And it's wise to kind of pay attention to that figure, because inadvertently, sometimes you can go over it by a small amount. And I recently helped a woman who had only gone over the amount by $40, but that meant that for the whole coming year, she couldn't collect GIS, which could be quite a change to her income over the course of the year. The maximum GIS payment that anybody can receive is $980 a month. But as you probably know, we all collect CPP, sometimes when we're 60 years old, sometimes we wait till we're 65. And then on top of our CPP, we get our OAS. On top of our OAS, then we can apply for our GIS. And those three together should bring us up to approximately $1,580 a month. And if perhaps if you don't get any OAS because you didn't collect a pension while you're an adult in Canada, then you can also collect the GIS payment. No, you have to collect the OAS, excuse me, but maybe you didn't get a CPP pension, then you can collect the GIS, and it can be a substantial amount of money and help you out every month. The CRA makes retroactive payments. If you all of a sudden this year you think, oh my goodness, I could have applied for this for the last 2 years, you can still apply. The CRA will make retroactive payments on your behalf. And I can't tell you enough how important it is to get your taxes in on time. many of the problems that arise in Rachel's Paul River office, and probably in Campbell River also, is when people don't get their taxes in on time, and then things like GIS, GST are delayed because of it. For those of us who have friends who are getting older, we might want to ask them, and be thoughtful and ask them, how are you doing with your taxes this year? Because if somebody has passed away or another traumatic event has happened in an older person's life, they can very easily forget to get their taxes done on time, and it can really cause them a great deal of grief. So if we can be of any help in that department, it's really a good idea to do so. I have another note to myself to remind you that Canada.ca is a great source of information. Now, can we go to the next slide, please, Christy? I want to talk to you today about fraudsters and scammers, because this is something that has happened in Paul River. Last year when I talked to the RCMP, the person I was talking on behalf of, woman had lost a substantial amount of money, close to $20,000. My friend lost, close to $3,000. And this is how it worked. She got a phone call one day telling her that if she didn't pay an outstanding bill to the CRA, that she was going to be taken to jail. In fact, the police were standing by to go to her doorstep immediately if she didn't make good on this promise to pay off this debt immediately. So my friend was convinced to go to Walmart, where she purchased iTunes cards that she was told were the new money order, the new age money order. And she, over the course of several days, spent close to $3,000 on these iTunes cards. The way that works for the fraudster is that once she purchased the cards, this person was on the phone immediately to her saying, read the numbers to me. And she would turn the card over and read the number, which means now the card is useless to her because the money has been siphoned off somewhere else. The scam didn't stop until she went to her bank to withdraw more money from a special savings account to put it into another savings account so that she could withdraw money from that account to give to the scammer. And the bank manager said, why are you doing this? And my friend told her why, and the bank manager actually got to speak to the person who phoned while my friend was in the manager's office. But there's nothing anybody could do about it. My friend had lost her money. Fortunately, she didn't lose all of her money, but she did lose a substantial chunk for a person her age, and it was very sad. It made us all feel very bad. So I just want to remind you, the CRA does not make phone calls. They don't make phone calls, especially threatening phone calls. If you ever feel frightened or alarmed by a phone call, that should ring a bell for you and remind you that this might be a scam. Go and ask somebody else. You can always say to this person, give me your phone number, please. I'd like to phone you back when I have a moment, and go and ask somebody else about it. You can also go to Canada.ca and look at their website, and they'll give you an idea by punching in a few numbers, whether that's a fraudulent phone number or whether that's a bona fide phone number. What the CRA will do if they want your attention is they'll send you a letter. Once you get a letter from the CRA, then they will tell you if they need to talk to you. And if they need to talk to you, they will provide, like it says here, their name, their phone number, office location, everything that you need to know that this is a legitimate claim. So they'll act in a compassionate and non-threatening way to you. So scammers are out there, especially with the pandemic happening right now, and people in a heightened state of anxiety. They are able to get money out of us quite easily, and they pretend to be CRA agents, and can convince you with phone numbers that pop up in your call display that indicate that it's a local phone number, so you think that might be legitimate. So be very wary, be on guard, and remember to help your older friends and ask them, could you run something by me first before you give up any money? And I'd like to point out also that some stores are in cooperation now. Walmart and Shoppers Drug Mart do stop and ask customers, why are you buying all those iTunes cards? Just to kind of help out in case somebody is being scammed. And that's heartening to see that there's people out there watching for our seniors, or just everybody that might be in a vulnerable enough position to get scammed by one of these artists that are very clever people. Is there another slide there? There you can go, you can contact the CRA, you can contact the RCMP. Sorry about that again. I don't know anybody who's ever had their money returned once it had been scammed. So you have to take care up front. Is there any more slides? And here you go. Here's some more phone numbers here. File a complaint with the police. You can call the Canadian Anti-Fraud Center. We've got credit bureaus that you can call. And all of this information will be made available to you. And if you phone one of our offices in Campbell River or in Powell River, we'll be able to pass all of this information on to you at any time. And there we are. We're here to help. Thank you.
And thank you, Jerwin. Now, before we move into the question and answer segment of the presentations today, I just thought I'd cover off some of the more common queries or inquiries that we receive in Rachel's offices and how we've been able to assist. And what I've done here is picked out examples as they may relate to your taxes or dealing with the CRA. So one of the most common is, for different reasons, people may not have access to their notice of assessment, and they may need it for different reasons. More recently, anybody who was applying for the BC recovery benefit needed to use information, the net income that was reported and shown on their notice of assessment. So if they didn't have a copy of it, they weren't able to complete the applications. So we can very quickly, on behalf of the constituent, go to the CRA and obtain this information, as well as a copy of your notice of assessment. The other area where we've helped many, especially in the last year, is with the disability tax credit applications. There was an emergency benefit associated with these, with people who did have the DTC in place. So rather than people mail in their applications and wait to determine when they're being assessed, especially if someone doesn't have access to the internet, we're able to submit the applications and work with the constituent if they did have any questions back from the CRA. And we found the turnaround this year was pretty incredible with the CRA, especially because we're communicating everything electronically rather than through the mail. Another area where we get a lot of questions, if someone who may be waiting on reassessments for, going back several years, or they found additional information. And so once they submit the supporting documents, they don't really hear anything from the CRA. So it can be a real concern. And, the question is often, did I forget to provide information? Did I do it wrong? So we can quickly make an inquiry to best determine what the status is, and so to put someone's mind at ease in terms of the work being in the CRA's hands and not in the hands of the constituent. And then one more that I would like to cover is we often hear from individuals who have received communication from CRA, and as Jerwin said, communications from CRA will come in writing, and they're received and they're not quite sure, and so people will panic because it is, after all, the Canada Revenue Agency. And we ask that you don't fret over communications that you receive from CRA, but rather reach out to our office, because we can help to find out exactly what the intention is with the communication. And in particular, because often communications that are sent out by CRA are generic. It may not even relate specifically to you, but it's a way of them putting it out in case it relates to you. And so if it's not relating directly to you, or it doesn't have a direct impact, then you may have spent all this time worrying about having received a letter from the CRA. So these are some of the examples. Of course, any question that you may have, if you can't find the information, we will try our best to do so with you and on behalf of you.
That will bring us to the end of today. So I just want to thank all of you so much for participating. I know it's a lot of content. Like I said, if you're interested in getting a copy of this so that you can listen to it again, if there were parts that you feel you need to go over, please don't hesitate. And of course, if there's any particular challenges that you're facing, we are a resource, and we would very much appreciate having an opportunity to give you information. And there's a lot of different organizations across the riding that do help during tax time. So don't hesitate to contact us if you need support, and we'll be happy to do that. And I guess in closing, I just want to say that I'm still continuing the fight around guaranteed income supplement. I don't know if all of you saw, a little over a year and a half ago, I did table a bill on this, because one of the things that I have learned by doing this job is that a lot of seniors are getting kicked off their guaranteed income supplement because they got their taxes in just a little bit late. Usually it's because they have a health issue, or they've lost a loved one, or they've been in the hospital. It's not because they don't want to get their taxes done on time. So we actually did a question to the House, and we found out that over 30,000 seniors across Canada lose their guaranteed income supplement every July. And by the time the 4 months have gone by, all of those folks are back on their guaranteed income supplement. We've literally had seniors call our office saying, I'm going to be evicted. We've worked with those folks to make sure they don't get evicted. I can't imagine anyone wants to see their 86-year-old loved one get evicted. It's just not okay. So what I've done is I've put forward a bill that would just make it that every senior that receives the guaranteed income supplement across Canada would get 1 year's grace period. So if they were a little bit late, it would not stop their guaranteed income supplement. And I think that's so important. The other thing that I learned by doing this work is a lot of folks were saying if there was an onset of dementia, they wouldn't see it right away. So what families asked is that the CRA, Canada Revenue Agency, reach out more frequently to folks that are receiving the guaranteed income supplement who are not doing their taxes on time. Send more letters to them. That's what we heard from families. It will help us know that there's a problem. So those are the things that I am doing to support some of the most vulnerable populations in our country. And I just want to thank all of you for participating today. And of course, please contact our office if you have any questions. And we will let you go and enjoy the rest of your day. Thank you again. Bye, everyone.